Everyone's chasing multifamily deals right now, self-storage, Airbnb, and single-family flips. All the meanwhile, there is a hidden gold mine right under your nose that you don't even realize. Today, what I'm talking about is RV parks. Now, you might have heard a lot about RV parks, but I am going to give you real hard facts why this is such an important niche that you as a real estate investor or an investor in general need to take a closer look at. We'll also break down exactly how the business really works and how you can find your first deal step by step. I'll give you my 5 keys to making your park wildly successful and make sure that you pick the right investment. So let's jump in. Here's the truth. There are over 16,000 RV parks and 90% of them are mom and pop owned. What does that mean? That means, translation, you're not fighting Blackstone or institutional money just yet, which means opportunity. Second, it's very niche. Everybody and their cousin and their mom and their brother-in-law and everybody wants multifamily right now, which is why cap rates are compressed and cash flow is thin. RV parks, on the other hand, flying under the radar, and that's why margins are better and your cash on cash flies, which means higher cash on cash returns and bigger profit margins for you. Not to mention that the market is growing. Today, the RV market is $24 billion, and by 2028, it is projected to be $27 billion. Add in the $24 billion camping market, and you've got a double engine growth story. So let me paint you a picture of exactly what's happening in America right now. We have 11.2 million RV owners. That's a 62% increase from 2001. The pandemic didn't slow this down, it only accelerated it. Remote work and a desire for outdoor experiences as well as affordable travel options have made demand surge. But here's the kicker. While the demand is certainly surging, the supply is not keeping up. Most investors are chasing the other asset classes and ignoring this gold mine, which is again an opportunity for you. So let's talk actual numbers and actual cash flow. The average RV site generates $600 to $1,200 per month, depending on amenities, where a really good single family may generate you $300 to $500. Most of them are barely getting by on $100 of cash flow. But it gets better. You have the opportunity to lower your operating expenses and not be on the hook for some large capex things that hit the multifamily area. There's no interior maintenance, there's no appliance repairs, there's no carpet cleaning or painting, minimal utility costs, and lower insurance. Basically, you're renting dirt. The RV industry is projected to reach $63 billion. Baby boomers are retiring with even more wealth than any previous generation. Millennials are embracing experience over possessions, and you've all seen Gen Z in the van life movement. In my opinion, this isn't just a fad. This is a fundamental shift in the way Americans vacation and live life. The baby boomers are the biggest travel demographic, and they're still fueling demand. There's record RV sales post-pandemic. First-time campers have 5x since 2020. Surprising number of people are choosing long-term RV parks over that of apartments. That's the cocktail that is fueling these assets. So how do RV parks actually make money? There are 4 basic types of RV parks. You have your transient parks, your destination parks, your long-term, mid-term stays, and your hybrid. So your transient parks are going to be short, along the highway, overnight travelers. Your destination parks are a resort type, a destination, somewhere that people want to go and play. Think pools, lakes, fishing, and family fun. Extended stay is your month-to-month or more affordable living. Hybrid can be a mixture of any of those, plus maybe some RV storage and some other sneaky profit centers. Now, of course, when you think of revenue, you think of lot rents, whether that's nightly, weekly, monthly, annually, but there is revenue streams beyond just lot rents. Smart RV park owners don't just rent sites, they maximize revenue through laundry facilities, camp stores, propane sales, RV supplies and repairs, event hosting, food trucks and restaurants, storage for RVs and boats, and even mail service for full-timers. And for the most part, even during economic downturns, people don't stop traveling, they just adjust a little bit. So instead of the expensive hotels and resorts, they may choose a more affordable option of RV and the camping life. So your business can actually benefit even during those tough times. The bottom line is you can have multiple income streams, a sticky customer, and the flexibility to pivot. So we've talked about the incomes, but you also need to be aware of the costs of running an operation. Like any business, it's not all profit. You've got maintenance on things like roads, all of your hookups and your amenities, taxes and insurance, utilities and staffing, and marketing. This one is huge. Most mom and pops neglect this section, and that's why you can crush it. Make sure you run it like an actual business, not just a piece of dirt. Here's where most investors make the mistake of only searching online. They'll look at places like LoopNet and Craigslist, which are fine to get a feel for the market, but always the best deals are going to be direct to seller. You can search places things like campground marketplace, parks and places, RV park store, biz buy sell, LoopNet and Crexy like I mentioned. But the real money is in the off-market game. So what are your due diligence checklists? Market demand, occupancy, comps, growth, demographic. Who is your actual customer? Are they more of the transient or are they going to be more medium to long term? Location, what does it buy? Is it close to the highways, a water source, attractions? What's drawing the people in? Seasonality, is it year round or is it shut down in the winter? Zoning and regulations, don't just assume because you have the land that you can walk in day one and start an expansion. Financing your first park. How? After I've figured out I have the park, I've done my market research, now I just need the money to actually go and do the deal. There's three main categories. There's the local banks where you can go in and start to establish a relationship and maybe they might give you the best terms. There's the SBA, which is favorable because it's a lesser down payment required and they'll also work with the business aspect, make sure that the underwriting is correct and that you can service that debt. The third one, my personal favorite, is always going to be creative finance. Turn the seller into your partner and make them be the bank. Upgrade them from landlord to the bank. I've done videos breaking down exactly how we've bought parks for $0. Make sure you check those out on our channel. Here are my 5 key takeaways that will separate the winners from just the rookies. Number 1 is to buy an existing park. Don't try to build one from scratch. It's too slow and it's too expensive and you won't make your money back soon enough. Stick within a few miles of a major highway. If it's easier to get to, more people will be drawn to it. Prioritize parks that are open year round so you can have cash flow throughout the year. Look for water features like lakes and rivers and the ocean. These will deliver higher rents and a higher demand. Master online marketing. Google, Yelp, Facebook Marketplace, RV forums. If people can't find your park online, you are seriously leaving money on the table. So follow these and you will set yourself up to win in this niche. So if this video opened your eyes anyway, do me a favor, hit that like button so more people can see it, share it with a business partner, and subscribe because I've got way more coming on RV park investing. This is just the beginning. RV parks are one of the last under the radar opportunities, so make sure that you don't miss it.